All right. Hello, everybody. Welcome to episode 4 of Options Trading with Kevin Q&A webinar. I'm here, as always, to share with you my thoughts about the market from last week and going forward as it relates to options trading. I have 10 years of knowledge and experience to share with you, and I appreciate you all taking your time and your interest to listen and engage with me. Just a quick reminder for those who find this video on YouTube randomly, the best way to follow me is on Twitter at Options with Kev, not Kevin, just Kev, Options with Kev. And I'll update, when my next live webinar is. You can ask questions live. I also post random trading tips throughout the day as I have the time. If you love hearing about options trading and the stuff I have to share, make sure to retweet my video when I post it, tell other folks about it. A lot of folks out there trading, new to trading, been trading for years, and everyone can benefit, and if you're on YouTube, please hit the subscribe button to my channel. So I appreciate that. And of course, last thing before we get started, the disclaimer, the thoughts and ideas on my webinars, my Twitter account, or any other forum, doesn't matter if you call me or message me or whatever it may be. Those are my opinions. They're not investment advice. And as always, I will never give a specific trade call. I will never say, buy this option at this strike for this expiration, that kind of thing. Or I will never tell you what to buy or sell specifically. As we can always analyze past trades. We can talk in depth about how you want to improve your trading, various strategies, setups, hypotheticals, stuff in general, but no specific trade calls. I want you in the end to be very self-sufficient. That's the goal. Okay, well, let's get started on a recap. Since it's Monday and we did not have a webinar last week, let's recap last week. Let's separate last week from today because very different. Today was exciting. Last week, not so much. Last week, we had a really small range. So let's look. I'll do a 5-day chart. Okay, so last week, so this was last week right here, about a 40-point range or so. But if you see, intraday, this was like what, 10, 15-point range, 10, 15-point range, 10, 15 point. This, I think Thursday we had a little bit more, 20-point range. Not much going on. I think Friday was like an 8-point range. I left to go to the casino like at 1 because I knew nothing was going to happen. From 8-point range on the SPX, that's sad. But yeah, it was range bound. I think the only real plays that were notable were the vaccine makers. We played them up in past weeks. I think there was some down put plays. But aside from that, it was a patient, avoid too much trading kind of week. I personally ended up with a small profit, small for my account. So I consider that a win, not too much going on there. I kind of knew that nothing was going to happen because premiums on both sides, calls and puts, were super low. So it kind of told me the market was probably going to be pinned. So if you see how I have premiums here, for various things, I have, like, for today, I had the 44.30s on the downside and the 50s and the 60s on the upside, and obviously various, other stuff. But the point is if you watch, say these are the 10 or so tickers or things you watch every day. Now, I don't have the exact numbers. If you quiz me, it's like, what is the price of Amazon on Monday, 100 points out? I can't give you the exact number. I don't do that. I don't need to do that. But what I do know is if I'm looking at SPX calls or puts at the open, whatever, 10, 15, however many points out in one direction, I can just, my experience just tells me, okay, this is cheap. This is expensive. This is higher than normal. I don't need to know it needs to be exactly 1 or 2 or 1.5, but I can tell just based on looking at all these numbers week in and week out. And, and you should be able to kind of get that gauge too, whether it's SPX at the open for a same day expiration, or Tesla on a Tuesday for the same week, 20 points out, or Amazon on a Monday, 100 or 150 points out. You should have a rough idea of what that should be. Obviously, if it's an earnings week, if there's an event for that stock, if there's an event for that market, that will change. But on a given random week, like last week was kind of a random week. you kind of have certain expectations of what that may be. Also, and before I go, those numbers, and I can't show you last week's, but those numbers told me that we weren't going to move very much because the premium wasn't very high. Also, if I find, where is it? The VIX. If you look at last week, if you look here for this is last week, 8, 9, 10, 11, 12, look at that. The VIX was in a, obviously throughout the day it was doing whatever, but this was last week's steady downtrend. And remember, VIX is volatility. So if volatility is lower, then we're not going to be doing much. So again, that's another indicator. So that also helps. And if we look, and I like to always look at the ES for that kind of thing. Why is this? No, come on. There we go. That works. I don't know why this is, there we go. Okay, fine. But if you look, actually I probably have to go a little more. If you look, remember when I first started my webinar, we were in that 2-week trading range on the ES, basically the end of July to the beginning of August. See this trading range right here, this box right here. And then we basically kind of, I wouldn't say we broke out, I guess, but it wasn't like a hard breakout. But going even into last week, we didn't really break out of that range. We just kind of tested we broke out a little bit, then we tested the original resistance here as support. And remember, it's I think I've said in a couple of past webinars, we were in August. Most of the major earnings are over. It's summer. People are vacationing. It's peak vacation time. Volume's low. Volatility's low. So we wouldn't have had any reason to go up or down. There really wasn't any news event. I mean, maybe some of the inflation type data was a little mixed, or some of it was a little hot, but then the virus is getting worse. So that kind of balanced that out. So there really wasn't anything to pull us in one direction for the past 2 or 3 weeks. So that's another indicator how to think about the market. One other note, if you recall last Monday, a week ago, Bitcoin had gapped up rallied over the weekend, as it does many weekends, and then MicroStrategy gapped up. And I got a lot of good messages about this. A lot of folks said, I did great. I sold the open at the gap up because they held from Friday, because Bitcoin likes to rally over the weekend. Or I got other messages like, Kevin, I did great. I listened to you. I didn't chase that gap up. And I don't have I'm not going to pull MicroStrategy up. The point is, it gapped up last Monday and it pretty much sold off. So if you didn't sell your Friday that you carried over at the open, then you made less. And if you bought that open, you kind of got screwed, because I think it just went down. I'm not sure why it went down, because Bitcoin was doing well the past week or two. But regardless of that, you had a nice gap up. I think you made like probably 3x or so. So why not? So that's good. That's good. And kind of go into a couple of messages I got last week. There are 2 types of messages I got last week when folks were telling me about their week. Some folks were, I did great. I didn't overtrade. I listened. I was patient. Awesome. Then the other ones were, I overtraded, or I made some good amount, but then I overtraded and I gave it back, or I lost money. So, it's one more of the first one and less of the second one. And this kind of goes, is also common based on a couple messages I got. You can't have the mindset that you need or should make money every day, or even every week potentially, depending on your account size and your strategy. Sometimes it's just not a great week to trade, like last week. And on those types of weeks, your account may just plateau, or maybe even, dip slightly, small, just, you tried a few positions, you played small, nothing really worked, or maybe you had a small profit, but it's okay to plateau. Plateau is fine until the next, great opportunity or great week there may be. It's just like if you look at any chart for any stock, a stock that's like, like C Limited or whichever COVID stock you want to pick from last year, it'd be like 5 steps up, 1 step back, 5 steps up, 1 step back. You don't want to do 5 steps forward, 5 steps back, 5 forward, 5 back, or even 10 back. You want steady up, a little pause, consolidation, or whatever you want to call it, and then up again. And it's up to you to determine what those may be. And I've kind of given you some indicators and hints in the past, 5-10 minutes about that already. No matter what why you're trading. If you're doing this for your actual income, if you're doing it for extra vacation money, you're saving for a house, kids' college, retirement, whatever it may be, you don't want to base your trading decisions on your monetary needs. Now, of course, you want to decide at the outset, what's your account size and what your risk is. Now, you want to say, okay, well, I need X amount of money. I can only afford to put away 5 or 10K to trade because I need the other 40K for 20K for college tuition, whatever it may be. So that does determine your risk and your account size. But once you've determined the number you're playing with and your trading size, you shouldn't make a trade or a trading decision based on monetary needs. If you're like, I need X amount of money by next week or next month to whatever it may be, pay rent, pay tuition, whatever it may be, you can't have that in the mind, because then you're going to overtrade. You're going to mess up because you feel like I can't make my goal in whatever short time period if I can't make a trade. That's true. If you don't make a trade, you can't make that goal. But you could also make wrong trades, rush, and lose money. Or you make money, but then because you're not quite whatever you want to be, you lose the profits you just made. So like you shouldn't have a set number in a set period of time because of some life decision or need. You can't put those two together, because that will not lead to good trading. You want to make good trading decisions independent of everything else. If you need money for something else, then put that money aside already, whatever you have left over, and then figure out what if it's 10K, 1K, 5K, then obviously you have to figure out what your average trade size is. That would be much smaller than that number, and your risk, and then make good decisions there based on, all the things I've talked about over the past few weeks. And then lastly, another comment about sort of mentality is, I know a lot of folks, we all do this. We're looking online, we're looking on Twitter, we're looking at some of us are in a trading room or a chat room. We're getting a lot of people we talk with, a lot of ideas. You're going to see all kinds of people say, "Oh my God, this stock's great. This stock's moving." The PayPal, whatever, Disney, whatever. Stocks that you don't even watch, or there'll be a random ticker that you've never even heard of. They're like, "Oh, this is moving. This has some random news, whatever it may be." Don't get sucked into every comment or every post. It's good to take information, especially from folks that you've seen and gotten to know in the room or online that you kind of trust and you think that they are smart and make good decisions. Obviously, take that info, but evaluate it for yourself. Does it make sense? Do you understand why they're making that trade? Do you know why you would make that trade? It may not be for the same reasons. Is it a good risk reward? Is it good for your account? And an example of is it good for your account is some trades, some options have a premium of $5 or $10. And if you have a small account, you can't even buy one contract of that, because that's like, 10, 20, 50% of your account. So I hope these kind of insights these were all based on comments and messages I got over the past week were helpful to get in the right mindset. And then looking forward, we'll talk a little bit about looking forward, and then we'll go to today, because I want to save today for its own topic, and then we'll go to questions. Looking forward for the rest of the month. The second half of the month typically is more volatile, can be weak, isn't always weak, but definitely there's going to be more movement, especially after we get past monthly OPEX, options expiration, at the end of this week. But again, you have to wait for the action. Like today, there was action. You have to wait for the action. You can't just anticipate something that may or may not happen when you want it to happen. This week, we have a lot of retail companies and retail sales numbers, I believe, tomorrow. And then next week is Jackson Hole Fed Policy Conference. Who knows what's going to happen there, if there are going to be any surprises. And I'll kind of repeat what I said either last episode or the episode before. With Jackson Hole next week, it's an event. And you always want to think about it as there's action leading to the event, and then there's action after the event once you have the data or the news or the announcement. And this is just an example. This is not predictive, but for instance, if we're going into Jackson Hole and sort of the folks in the market are fearful, if people are bringing out the fear, they're like, oh, they're going to taper faster. They're going to announce a taper schedule or rate hike schedule that's going to be way faster than we wanted. Then we're going to drop into Jackson Hole. But then if nothing is announced, or maybe they announce a timeline for some reason and it's way slower than expected, then that's good. That's a positive surprise, and then the market would rally. again, I'm not saying that this is what's going to happen. That's just one of probably 3 to 5 main possibilities. But it's just to get, again, to remind folks of how to think about the market. I don't really have a thought about Jackson Hole at this point. Let's see. I do think between now and basically between now and the middle of next week will be key. I can't say what day, but between VIX expiration this Wednesday, options expiration this Friday, and then into post options expiration, hopefully we'll see where the market wants to take. Are we going to drop? Are we going to stay in place? Are we going to rally more? And then maybe Jackson Hole, there'll be a negative surprise. Like, I don't know. I'm just going to wait and see. Again, we'll see what the action is before the event, and see what the event is, and see if it's a positive surprise, a negative surprise, and that kind of thing. Okay. And then let's talk about today. Today was a fun day, and I'm going to give you all visuals and everything. Today was great. And I felt really happy. I was happy and upset with myself. I was happy because I felt like I played it perfectly in terms of, again, figuring out what the market was going to reverse. I did that very well. But I wasn't happy because I left so much profit on the table. And I'll kind of get into both of that right now. But I thought about it over the past few hours after the close. But there was pretty much no scenario that I could have held all my calls into the close. I was never in, even looking at it in hindsight, I cannot see any indicator that would have told me that we would have had a 40-point rally and an all-time high close. Oh yeah, Dershaw, I mean, I sold mine at 6. I took them from 2 to 6. They closed at what, 30 or what? It's ridiculous. I even thought about getting the 44.60s at like 1.5. They closed at 20. Ridiculous. This is not a normal. This was like last year. Remember when the first few months of COVID and we had those crazy, like those kind of markets? Or if we had, or if the SPX had like a major pullback, then yeah, these kind of big rallies can happen. But we were down what, 20 or 30 points? How was I don't know. I still, it's fine. I sold it at 6. You sold at 5. Other folks, hey, I still, in hindsight, can't figure out how I could have held it that long. But anyway, going into this week, if we look back here, we knew that, let's see, wait, let me go to the right chart. Okay, this is what I want, actually. This is what I want. So if you look at the ES here, you basically saw from last week, you basically saw that this was the support right here. You had 44.40, and then this was the sort of most recent low from last week, which was 44.30 on ES. And then we don't need to look farther up. Basically, like right here was the top of the range from that 2-week consolidation. So you knew that 44.30 and 44.40 were kind of the 2 main numbers because it was the prior resistance of the last trading range. And then so the opening hour, so let's go to today. The opening hour was interesting because we opened, we opened here and then we went down like 15. It was kind of a choppy down. It wasn't a straight down. And if you look, let me find, whoops, give me one second. I can't find the NASDAQ or NQ. So if we look at NQ today versus the XLF, let's look at today. So financials like dumped right at the open, but and then they kind of held up for a little while, and then they started rallying. Whereas tech kind of acted a little bit later. They dumped a little bit later, so it was kind of like it was weird because the first hour or so, and I think I commented on this in real time, was every time XLF ticked up, NQ ticked down and vice versa. So they were not in sync, and it was kind of hard. And then, but as happened, I think it was a couple of weeks ago when we had the last big SPX down. If you see here, XLF, I guess let's just say right about here at 10 o'clock, it started to rally. But if you see here, NQ 10 o'clock, it was still going down. And NQ didn't start rallying until, what is that? It's probably like 11:30-ish. So nothing was in sync, but still the financials turned out first, and then the NASDAQ did turn up. And we were right at this point, 10:30, 11. If we go back to the ES, which is right here, we were at 1030.11 right here. We were right at, this is 44.30, this is 44.40, this line. So this line's about 44.32, I think it was. So we were right at that major support again, the prior resistance. So, and also at this point, so those are some indicators. And also at this point, I was saying in real time that, oh, this is big support. We weren't breaking lower. See, like, so that first half hour, we kind of made a low, and then yeah, we made a slightly lower low, but this hour and a half, we didn't really break lower significantly. And the sentiment that I was getting from online and all, the couple of rooms I'm in sentiment was getting very bearish. And so for me, I'm like, and I've said this before, puts at support is not always the best idea. So in my head, I was like, oh, let's think the opposite. Risk reward is turning back towards calls at that point. And what's interesting, the most interesting thing, a couple other indicators. When I was watching, I had at various points 44.35, 44.30 puts, and I was looking at the 50s and 60s. Don't ignore these prices because these are today's. But at some point, right around, this 1030, probably right around here, 1050.11 mark, I noticed that the puts, they weren't changing like drastically, but every 15, 30 seconds a minute, the puts, say the 44.30s, were losing like, 0.1, 0.15 premium every, once in a while, 15 seconds, 30 seconds a minute. And then the call premiums were gaining 0.1 point. It was a slow kind of, trend, all while, if we go back to the ES here, the ES wasn't like right about here, right before 11. Yeah, it was going up and up, but it wasn't really doing much. And that also gave me another indicator, as I've said with premiums, that maybe the things were starting to make a turn. Over that 5-10 minute period, I was seeing, the call premiums gaining a little more and the put premiums slowly losing. So that was another indicator, besides from the fact that, we had been at this level for an hour and a half, and we hadn't really broken lower. Yeah, exactly. The trade is getting that's what I was saying earlier with like all these, we're at support, things were starting to turn, the sentiment was too bearish. The market is never that easy, you always have to think the opposite. It's like, wait, we're at support, puts are expensive, everyone's bearish. Like Dershel just wrote in the chat, from High Yield 6, one quote from him, the trade is getting crowded. Exactly. You want to be ahead of the curve. And then one other indicator for today, the VIX. I don't put too much stocks in the VIX by itself. It's just one of it. But if you look, the VIX, we gapped up, we double topped at the VIX at 10:30, and then it was slowly trickling down, and obviously throughout the day. But I don't know, once I saw this double top, basically, yeah, I got in calls and sold my puts, I think right at 11. I think there was like this big candle, and I think I got in right at this candle here. But, I saw the VIX was trickling down. And again, here, that VIX had a little down candle. See, I probably got in right at that down candle, because if you see here, if we had reversed up, that'd be one thing, but we sort of broke this, I guess, higher low, or whatever you want to call it. But we kind of broke that. So a lot of things happened in that, like, there was like 10 or 20 seconds where we had this candle here, we had this candle here, other indicators, the premiums were changing from puts going into calls. So all that told me, and what I did was I bought my calls first and I sold my puts. I always buy the flip position first in those indicators. So I bought my calls, I immediately dumped all my puts. The puts were actually rolls, but I did that all in because I had the orders ready. I had my sell puts order ready. I actually just, because they weren't that many contracts, I'm not playing with 100 contracts here. They weren't that many contracts, 10, 20, So I had I actually had my put sell at a market order, just so I didn't have to worry about that. And I obviously had a limit order for my calls, but I was more focused on the calls. Once I saw the indicators, ready to go, I immediately fired entered in my ask, put the order in for the calls, and immediately pressed the order in to sell my puts at market because I didn't care about those as much, and I got in. And here's the key, if you look here again, there wasn't that much downside. We had already gapped down. If I have the SPX, we gapped down like 10 points, and then there wasn't that much downside. This was the main action at the second half of the day. So the better play was actually to be more patient and wait until closer to the middle of the day for the upside. And I actually, I've said this before, when we kind of gap down or we're pretty close to support, we only like 10 or 20 points from support at the open. It's not the best risk reward for puts to begin with. I kind of broke my own rule, but I knew I was breaking my rule. And I knew that once we got to support, I was ready to dump my puts. As soon as I saw the reversal, I was ready. At least I knew what I was doing. And I was like, okay, I'm going to see if I can get some quick points on the put side. And then if the action reverses, I'll get out. But if you're not as confident on that, the best play was, and it's funny, someone actually messaged me before the open asking for my opinion about the day. And I kind of said, we're gapping down. We're not that far from this 44.30, 44.40 area. I'm looking for upside. So this was the main, you could have just kind of rode this out, not sure what's going on. It's kind of testing, and then rode this up because, you didn't have to get in right at 11. You could have gotten here, here, here. You could have gotten in here, here, even here. Well, maybe these were a little later because I didn't think it was going to go all the way up there, but you could have definitely got in, at various points here or even right here, if you wanted to try upside. Yeah, just wait for the bottoming process to play out, wait for the indicators that I've showed you, and then get calls. But still, my main sell levels were nowhere near, what is this, SPX? Nowhere near 44.80. They were closer to, if you zoom out a little bit here, let's go to the 15-minute chart based on overnight. And why is this being difficult? There we go. I don't know why this is being difficult. Show me the rest of the, there we go. I saw a sell level maybe at ES 44.50. I saw, where we kind of opened up Sunday night, maybe 44.56, which I think was sort of the gap, the area before the gap fill happened. So I did not expect this, I guess, second half of this rally. There was no indicator to me besides the fact that, they were going to squeeze and trap all the bears. So like, I still can't find a way that I could have made the money here. I still sold probably a little bit early. I think I sold like right about here, but it was closer to where like sort of my last, like, okay, I have to sell point. I really didn't, I just couldn't. I wasn't gonna, risk, this turning back down or kind of just, plateauing. But congrats if you did hold all the way to this gap fill. We filled the gap and we ended at all-time highs, and congrats. But I don't know if I could have done anything different for that. Okay, so that's it from me. A summary of last week, how I'm looking forward, and also today. As always, you can virtually raise your hand. There should be a ... more button, or sometimes it's not a participate button. You can raise your hand, I can select someone, or you can type a message and I can answer that question too. I'd love to actually like chat with you by voice. We can actually have like a conversation, but feel free to do either. I will look around. So far, no one has raised their hands, and please enter in questions. I'll give you guys a minute or two. I don't see a hand raised yet. Any questions? Hand raised. I know people had questions from last time. People were telling me in messages they had questions. So fire at me. Please raise your hand. People can hear me, right? Oh, here we go. Charles, did you make any other trades besides SPX? Not really. That was really my main trade today. I did get into some. The only other play I did would not be a play I would want to recommend to you guys. I did get ASTS calls. They had earnings and business update. They were super cheap, and it was super small play, just in case they announced anything, and it was a complete gamble. And it wasn't even anything that I would share with anyone. It was just kind of like I'm just gonna have fun with this and see what happens. But no, not really. No. Basically, I mean, you could have played Google, you could have played Amazon. Some of those, moved as well and rallied, but because those expire on Friday, you probably made what 3x, 4x maybe. And whereas if you had the SPX plays, let's say you had the 50s or the 4450s or 4460s, you were getting, I don't know, 10 to 15x on those because they were expiring today. And we kind of knew that the SPX was going to move today based on the opening action. I just didn't know it was going to move 40 points from the lows. Oh, hand raised, Matt. Yes. So I'm going to press a button that asks you to unmute. You still have to unmute yourself. But I have now given you the ability to, there should be a button to unmute your microphone if you have one.
Yep, we're good.
Matt?
Hey, Kev. You hear me?
Hello, Matt.
Kev.
Do I hear your mic? I don't hear you. My sound is on. You guys can hear him. Wait a second. So it's my sound that's the issue. Hold on one second. Uh-oh. Maybe that's why I couldn't hear anything earlier. Matt, sorry, I don't know why I can't hear you. I'm trying to think what's going on.
Yeah, how about now?
I'll answer a chat question while I'm figuring out my own issues. What is the difference between SPY call and SPX call? Well, I'll try to if you click on there, I might need to change to external next to me. I might change to thank you. Let me try that. Select a speaker. Aha, you are right. I am not on external speaker. You are totally right. I have a new monitor from a couple weeks ago, and no one chatted with me last time, so I didn't need to send. There we go. So let me answer Flora's question, and then Matt will come back to you. I think it'll work this time, hopefully. Thank you, James. What's the difference between SPY and SPX calls? I don't know every part to this question, but I think I know enough to give you an idea. SPX, SPY, I think the underlying SPY, ETF pays a dividend, and also it's taxed differently. SPX is taxed more favorably. I think it's like 60-40 long-term versus short-term. If you're, so for folks who, I love playing SPX because when I do my taxes, it's in my favor more so than other short-term options. Also, you have to buy a larger quantity, I guess, because, SPY, if we're looking at the 4430s, you're looking at, I guess, the 443s or whatever in SPY. So you gotta get more quantities. And, for me, all I need to do is, for SPX, sometimes if I don't sell them and I'm literally holding them right to the close, they'll just exercise for cash. So that's easy for me. I feel like I might be forgetting something, but those are kind of the differences. If you want to be serious about trading the index, the SPX, I would highly recommend XPX for tax reasons and other reasons, that kind of thing. Okay, Matt, yep, Dershow, exactly, cash sell, exactly. So exactly. That's what I was mentioning earlier, when you can hold it right into the close, and whatever it closes at, you get the difference for settlement. Exactly. So that's another point in your favor. Thank you. Where is Matt? Matt, here it is. Okay, I just given you the option to unmute yourself. Let me see if I can hear you this time, Matt. Sorry about that. Right. There we go. I can hear you.
Awesome. Nice to talk to you, Kev.
Great.
Hey, indicators that you were just going over. NQ, XLF, ES, those are all specific to SPX, right?
Yeah, to how I look at the market and how I trade SPX, correct.
Okay. And then for they would not be indicators for, most of the room doing, last week's biotech and all that stuff.
So yeah, no, a lot of this would not affect sort of the vaccine plays from the last 2 or 3 weeks. Those kind of traded independently from anything that the market was doing. The only kind of correlation or effect that may have had was that it just so happened that on the same week as those stocks were running, everything else was kind of pinned. So you could make the argument that maybe money was flowing in one direction.
Okay.
But yeah, like if something is I get there was there was various news. I mean, a lot of the news on the vaccine I think started when I think Pfizer and BNTX sort of I think it was what the Pfizer earning call or something like that, where they announced or they projected like their profits for the rest of the year on vaccine. And I think it was like 15 billion a piece for both sides of that partnership, something like that. And that kind of ignited the 3 vaccine stocks for like 2 or 3 weeks. So that, so for that, until that play was over, if the market tanked 100 points, it might put a damper on that. But the market was not doing anything. It was not going up. It wasn't going down. So that those plays had news, or if any other stock had news, like legitimate news that would affect its current or future earnings or potential or whatever it may be, then yeah, those would run independently of the market. And these indicators would not tell you anything for those really.
Okay. Yeah, and I'm transitioning off of I've been in stocks for 30 years now. But on the investment side, right? Buy and hold.
Mm-hmm.
So coming into options is a vastly different play.
Mm-hmm.
Thank you for ASTS though, by the way.
Of course.
So I got a bunch of that for long term. But how do you every portfolio is different.
Mm-hmm.
Everybody's account is different. What's kind of your take on that? Because I know you hold ASTS and some of these others for long term,
mm-hmm.
but it seems like some of the guys in the room are holding it, long term or leap, a couple of years of calls rather than the actual stock. And that, what I mean, yeah, you kind of you don't tie up as much cash, but what's the play there really?
Yes, that's actually a really good question. It's actually relevant to my own portfolio. So it's a great question. For many years, all I did for long-term plays was buy shares, and then, in the last couple of years, I got into warrants and leaps and different things. But yeah, typically when it comes to like warrants for SPACs, when SPACs running high and like leaps, like out of the money leaps, we're talking, I usually save those for more speculative, kind of like ASTS, I have a lot of conviction in it, but it's still high risk. It's still speculative. So, buying, leaps and that kind of thing, to me, I get the leverage without tying up as much cash or, that kind of thing. And that helps. Now, one other thing that might be relevant to your question that I've just literally started doing like this month. And this was something that I learned from Pounding the Table guy, or my buddy, Anthony O'Hyan, about buying deep in the money calls, 6 months to a year out. I think that's usually the range. So as an example, what did I buy today? I'm trying to think what I bought. Let me look. What did I buy today? Nothing on here. Let me see. This is an old watch list, but let me see. Let's see what we got here. Oh yeah. So as an example, I'm just giving you examples. Don't base on this for what to buy or sell. But if I wanted to buy DMTK, Dermatech, it's kind of not been doing that great. Or if I wanted to buy, one of the vaccine plays, instead of paying, let's say BNTX, instead of paying, $343 or, whatever may Celgene, instead of paying $72 a share, for Celgene, I forget what I bought. I think I bought like the 30, like for basically, I think for March 2022. So that's about not just over 6 months out. I would buy as an example, purely hypothetical, the 30 calls for 6 months, 9 months, a year out. And because they're deep in the money, there's barely any, premium aside from, there's barely any extra premium versus if you bought, at the money or out of the money. So that 30 call, that's what, a $42 price difference. I probably paid 42 or 43. So I'm spending, tying up less cash, and also, if it goes up, then I'm joining the party with, just like if I was in shares. But if it went down, or if it went to zero, or if it completely tanked, I lose less. The only key with that, and this is something that Anthony actually ironed out for me, which I almost got in trouble with, or not in trouble, but like I could have gotten in trouble, is you're not putting in the same dollar amount because it's more leveraged. You're actually putting in the same, you're buying the same amount of contract as shares. And let me give you an example of that. Let me just find one that's easy to think about. Okay. Fiverr, it's at 166. Say about the 100 strike calls for 6 months or a year out. And let's just take let's take you had let's for easy numbers. Say you want to put 100K in it, because just we're using a big number to make the example clear. If you wanted to put 100K into it, and what you would do is you would divide 100K by this 166, and that gets you, I can't do that math. I'll tell 100,000 divided by 166. So you'd be getting about 600 shares. So you'd be buying about 600 shares. And what that means is you shouldn't be putting 100,000 in the 100 strike. You should be, if it's 600 shares, you should be buying six. So you divide by 100, 600 shares, because it's 100 per contract. You should be buying 6 contracts of the $100, give or take. That's not an exact, but that was something that I asked Anthony about a couple of weeks ago, and he pointed out, it's like, Kevin, no, you have to make sure you don't put the same, because the whole point is to use less capital. So why are you using the same amount of capital on these deep in the money? I would only be buying 6 contracts, and I don't know how much that would be, but instead of it being 100K, it's probably like 30K or something, give or take.
You're backing into the number of shares and then converting it to contract.
Yes, exactly. Yeah. Exactly. Yep. Not the dollar amount, it's the share amount converting into contract, correct?
Yep, that's perfect. That's a good explanation. That's awesome. Thank you.
Okay. Great. Any other questions? I don't see anything in chat or anything else. Please. Oh, we got one. Please continue to raise your hand. I got a question in chat from someone who can't use the mic. In your SPX, when you went from puts to calls, did you look at the volume on the ES in general? Do you look at the volume on all? I don't actually trade futures. I know I tried out a room once when people were trading futures, and that kind of messed me up because it was like too much information. They were trading for, quick points here or there and that kind of thing. So it kind of messed me up. I left that room. But they do look at volume. I know occasionally, it's good to know, hey, volume's high, volume's low. But in terms of like that particular 10-minute period, I don't look at the volume. Maybe I should, but I haven't felt like I needed to do that. Just in the ES, I look at the ES because there's overnight and pre-market, and we have all those numbers, but all these other indicators, volume does matter, of course, and I think I pointed out at let me find here at 9. Where is the ES? I just had it at 9. Not 9. 11 o'clock. If we go to the 1-minute chart, I believe at 11 o'clock there was this kind of huge candle here, relatively huge candle. Maybe there probably was good volume, and clearly the premiums changed too. So yeah, volume does matter, but I look at volume a lot when I'm looking at individual tickers for sure. And you see there's a volume spike here, of course, but I have it there. It doesn't really. The action, I guess, reflects the volume. So, you can definitely look at volume, but it doesn't, like, I don't know, here we had volume, right? But I wouldn't have wanted to buy here, so that doesn't really tell me anything, I guess. It's not as useful as an indicator for me for when trading SPX, but for individual tickers, definitely. Anyone else? Matt, I see your hand is still raised. I don't know if that means you have. Oh, Simon's hand is raised. Let's go to Simon since I haven't heard from him. Simon, I just pressed my authorization. You should be able to unmute yourself and talk. Hello.
Hey, can you hear me?
Yes,
can you hear me?
I can.
Perfect. So yeah, I had a quick question. I just jumped in. I don't know, maybe you've touched on this before in the past, but I have a relatively small account. I know you trade SPX a lot. And I'm only comfortable buying positions that are about $200, you know, like for options, $200 to $300. Is SPX a good ticker for me to trade, or should I stick with stuff like Apple, where like the premiums are a little bit more affordable for someone like me? Like I know
Okay.
Sam talked about
Mhm.
SPX ratios.
Mhm.
I don't know if you've touched on those before, if you're able to touch on something like that.
Yeah, so to your first question about, okay, if your trade is about $200, yes, you can trade SPX, but not every opportunity and not every day. So most likely you're not going to be able to trade SPX on Tuesdays and Thursdays when it's not expiration day, because unless we're in one of those weeks where the SPX is moving 50, 100 points, you know, for you to get one contract of something for a premium of $2, you're going to go too far out, because you know we're not on options expiration days. But you can play it like today on Monday, Wednesday, Friday as an example. So and you can listen to the beginning of the call where I went play by play in terms of how I traded it, but I'll recap a portion of it, the part that applies to your question. So I traded both downside and upside. And I mentioned that downside was harder because we had gap down, we were at support. So puts were expensive. You know, the puts I bought were, you know, $3 to $4, and they went to, you know, $7 to $10, that kind of thing. So that would have been out of your range. But, and when we got to this about 11 o'clock hour and we were holding this major support, all the indicators I talked about earlier, and you can go back and listen, all the indicators were putting risk reward to call side. When I got the 44.50s, I paid $2 for them. I took them from 2 to 6. They went to 30, but they were $2. So you could have gotten one contract. So that was an example. If your max is about 200, you could have gotten one contract. And maybe because you had one contract, you took it to 30, and you know that's what, $200 to $3,000. I'm not saying you would have done that or should do that, but yes, you have to find reverse. The best opportunities for you would be reversal opportunities, like today where everyone was bearish between 10 and 11. Everyone was saying we were going to break, but we weren't breaking. You know, all the indicators I talked about were turning up. Risk reward was going towards the upside. And then, you know, you could have bought in the 44.50s for two, you know, right about, you know, between the 10:45, 11 o'clock range. So yeah, but it would have to be a scenario like that. Any normal random day, probably not, because today we had a reversal. So you have to be selective. So you know, you probably would only be able to play just a random guess 20-30% of the SPX plays I play. I think a lot of the plays I play are between like 2 to 5 or 3 to 5. You know, some definitely one or two is definitely possible. Now if we ever get like a week where we have huge volatility, like if you've been trading the market for the past maybe year or so, you know, there are days or maybe a second day where with the first day we make a low, and the second day we test the low or make a higher low, and then we V, whether it's the same day or the next day, we'll V. Like we were down like say 60, 70 points in one day, and then we'll go up 60 or 70 points. We've had like 20 of those in the past, you know, 6 to 12, maybe probably 6 months. And on those days, you could play for the V. Now, but you have to make sure we're the bottoming action and the indicators are still there. But you know, at that point, you know, maybe 50 points out or $1, because we had so much volatility, and you could go for the V and take it 1 to 10 or 1 to 20. So that's another example. But again, that's also a reversal example. Pretty much all your opportunities are going to be reversal. Maybe we gap up 20 points for no reason. Maybe we gap up to last week's high, but there's no reason we should be gapping up, and then we kind of just drift lower from the open. Then you could buy puts for reversal or gap fill, you know, potentially. But yeah, most of your opportunities are going to be probably reversals. They're not going to be, you know, like some of the straight plays I play where, oh, I'm just going to play for 20 points here, 20 points there. Does that make sense?
Yeah, no, that does. That definitely does.
Great. Matt has a question here. In your watch list, you have specific calls and puts to watch premium. How do you arrive at what you're watching? The morning numbers or the okay, let's go back to this one. It's a lot of it is just experience and knowing like what you're looking for. what do we open at today? I don't even remember what we opened at today. It's been a long day. We opened at what, 44, let's just say 44.60. So I knew for SPX, as we talked about earlier, that for ES, the support was 44.30, 44.40. So add, about 6-point differential right now. So that gives you 43.35 to 44.35 to 44.45. So that's why today I had you don't see them all, but I had the 40s, the 35s, the 30, even the 25 puts at various points, because those are kind of the support areas. And then when we got to the lows, I knew that resistance areas were closer to 44.50 or 44.60, or ES 44, 45, 44, 55. So based on ES numbers, I kind of know where the support and resistance numbers are. Same thing for like Amazon or Google, depending on where we open, and a lot of times I get, for these big tickers, I usually get round numbers. Obviously, if we're closer to the expiration, I'll be more precise, 32.30 or 32.25. But it was a Monday, so I'm looking for more round numbers. Tesla, obviously, it's only a $700 stock. 700s. Well, these were a great buy at the open, I'm assuming. But yeah, I was looking at the 700 because that was a round number. If we had gone up for some reason, the 720, I think 730 was roughly the resistance and high of last week. So that's why I would have the 730s on there. Same thing with, BNTX, Moderna, these kind of things. 280. Wow, this wasn't ambitious. Oh, but we closed at like 250 something. Yeah, so we closed. So this was from the open. This was over the weekend. We closed at 250 something on MBAX. So that's why I had 280s. This is just I was so busy looking at SPX, I didn't even adjust this. But yeah, 280s would not be something to look at, right this second. But that's kind of how I come up with these numbers: support and resistance levels on the index or on the individual tickers. So these are in. Matt, I'm not sure what you were referring to when you wrote. So these are indicators and not trade points. Oh, are you saying like because of the levels and the resistance? Yes, support. Yes. I'm not saying I'm buying it at 44.30. I'm not saying I'm buying Amazon at 3,200. No. That's where I'm probably looking to sell them at, if anything, because we're early in the week. If Amazon opened at, I don't forget what we opened. I guess we opened right around 3,300. Yeah, like if we dropped, if I bought Amazon puts at the open, I probably would have sold it closer to 3,200. Yeah, I wouldn't buy it there. No, exactly. Great. Any other questions? Simon, your hand's raised again. I'll look. I'll give someone else an opportunity, see if anyone else raises their hand or types a message. But if not, I'll come back to you, Simon, in about 10 seconds. So if you want to jump in front of Simon, Simon says, raise your hand. Oh, he removed his hand. Maybe it was just from earlier. Hand raised. V. All right, I pressed the button. You can unmute yourself. Hello?
All right, can you hear me?
Yes, I can hear you. It's a little soft, but I'll turn my sound up a little bit.
All right. Hey, Kev, how's it going?
Doing well. How about yourself?
I'm doing okay. I wanted to ask you, what is the easiest or most efficient way to track these option prices?
Do you mean like on a watch list like this, or what exactly do you mean by that?
Well, because as I'm listening to you, so you don't watch volume. As the trades are going on, if you're not watching so much the price of the stock, in that case, how do you monitor so many different stocks and their option prices at the same time?
Well, this is my watch list right here, and it's for me, actually, I think this is not that many. This is what, 10 to 20. most people I know watch 30, 40, 50. I only have one screen. It's a big wide screen, but I know folks that have 6 screens and that watch 50 different stocks. So I'm not, for me, I think this is actually pretty limited. This is like, if I just have this watch list open and then over here, this is actually what you see is only half my screen. My screen is actually twice this size. So, but if I had this here and I just had, 5 to 10 charts here of my main indicators, you do have to learn to what to watch for. And here's the thing. I'm not watching Apple every second, like today, Apple was a good indicator because it opened up, it went down, and then went back up again. But I'm not watching a lot of these. On a day like today, when I knew that I was probably going to play SPX, I would check into these every once in a while just to make sure they were moving in the direction I thought they were going to do. But I'm not watching. I'm not watching. I'm not watching snow. I wasn't watching like these here. Like you see, I don't even have option strikes here. It's because none of these really had news or moving. So I really wasn't even watching these, so you don't want to. My philosophy is I don't want to have 50 different indicators, 50 different stocks. This is only what. Okay, that's an index, that's an ETF. So really, it's 1, 2, 3, 4, 5, 6. That's technically not a stock by itself. 7, 8, 9. Yeah, let's say it's about 15, about 10 to 15. And, I'll adjust these, I'll add some, if the vaccine plays are not moving, I'll remove all the vaccine plays. If we were, back when GameStop was moving, I would have GameStop. Some of these would get, flexible. I always have SPX, I always have XLF, always have, the major fangs and Tesla, unless, Tesla is, maybe one day Tesla will be completely dead as a trade. But really, it's, you do, there is a good amount to watch, but hopefully, I don't know if you were on the call at the beginning when I was giving you sort of the narrative of how I trade SPX. I first saw, what was it, the XLF turn up, then I saw NASDAQ turn up. So it was one of those things where I was looking at XLF because that dropped first, so that's where I knew to watch XLF first, and of course SPX premium. And then when it's turned up, I'm like, okay, it's going up. Now let me look at the NQ, wherever it is, NQ somewhere. I lost it because the screen is too small. NQ, I'll be like, okay, I'm waiting for NQ to turn up. And then at this point, I'll have NQ, and I'm looking at NQ, and I'm looking at the SPX premium, as I said earlier, when the puts were kind of drifting lower in premium and calls were drifting higher as we were about to make that reversal. So I'm not watching these 20 strikes. I'm not watching everything literally every second. I have it all ready for me, but I know at what moment what I'm looking for. At various points, I'm looking at maybe 2 or 3 things at any given second. I'm like, okay, I'm waiting for this to happen. So does that kind of answer your question?
No, it totally does. Thank you for taking the time out to explain.
Okay, great. All right. No other hand raised. I don't see any messages. I'm happy to wrap up. I'll wait for a couple, 30 more seconds. Please raise your hand. Oh, here's a question. Another question. Great. My other question has to do with something Sam said last week. I quote, "Real smart people look at premium before anyone buys and sees the ask moving up." Can you help me understand the logic watching the bid ask and when? Can you help me understand the logic of watching the bid and ask and when there's a spread and what to pay attention to? Okay, yeah, no, great. No, this is a great question. Yeah, so for me, I think looking at premiums is helpful for me to know, okay, when something might happen. And then it's also helpful for me to know how to decide when to sell. When I was looking at my indicators, like I was saying earlier, let's use the same example from today. XLF turned, NQ turned, VIX was going down, and I was watching the 44, let's just say the 4430 puts, and I was watching the 4450 calls and the 4460 calls. And then when I was looking at the the bid and the ask, these are warped right now because these have expired. But if you're looking at the bid and the ask, as I was mentioning earlier, when we were starting to reverse, and even before we really, before we really reversed at that 11 o'clock hour, if you watch the premium, the bid, and the ask, these were going lower for the puts. The puts, even though we were at lows and everyone was bearish, they were going lower by 0.1, 0.15 every 30 seconds, 15 seconds, and the calls were kind of drifting upwards. So you saw it was subtle, but it was just enough of a shift that you were paying. Again, I knew what to look for. I knew the indicators were starting to turn. And so then I knew, okay, I'm looking at the SPX. Occasionally I glance at Amazon and Google, whatever else, because all these things are connected. But I was just looking at these three things right here based on these three strikes, because again, I was looking for calls because we were at support. That's why I had more calls than puts at that point. And you kind of look at premium that way. So again, premium is definitely important. There are plenty of times where the premium does something and then it doesn't do what you want it to do. The premium is not the end all be all. The premium tells you what's possible, what might happen, what they see in terms of orders coming in and that kind of thing, that the market maker sees. But it's not, it's not the end all be all, but it definitely is a important indicator. And I'll remind folks, as an example, another one I can remember off the top of my head, my Sava play. It's from a few weeks ago. If you don't remember, you weren't here. Sava was a biotech play that had an event. It had a data event. I made money on the run up and I still held some into the event. So when the news was announced that morning and we opened, my 195 Sava calls, and the stock opened at like 145, they were 10 bid, 12 ask. I was like, oh, that's great. So that's why I didn't sell them. I was like, oh, that's higher than I expected. Let me see what happens. So they were at 10 bid, 12 ask. And I think this was maybe in episode 2 or 3. And I detailed this. I even showed you the sort of the play-by-play in terms of the times. You can go back and see, but I'll repeat it again. It was 10 bid, 12 ask for about a minute or two. And it held there. It might have drifted lower a tiny bit, but it was roughly in that range. But then at one point, maybe a minute and a half in, maybe it was at that point, it was 9.7 bid, 10.7 ask or whatever. Maybe it drifted by a little bit. It suddenly went down like by 1. It suddenly was 8.7 bid, 9.5 ask, almost instantaneously. And I had my order ready to sell, because when it was 10 bid, 12 ask, I put in an order at 9. I didn't execute. I didn't press, order the confirm yet or whatever, execute. But I had it ready at 9 because if it was going to break up, I wasn't going to sell immediately. I was going to see how it plays out. But if it started dropping from 10 bid, 12 ask to closer to 9, I had my order ready to go and I sold. And literally in 5 minutes, Sava went from 140 to 120 or 115. It literally dropped like 10, 15% or 20, 25 points in 5 minutes after that premium drop. So that's what you do. If you're looking to get into position like SPX reversal today, you're watching the premium to see if we're looking to get into calls, if the calls are kind of going up in price while the premium and puts is going down, even though this is not the right one, even though at that moment, in this 15-minute period here, we weren't really going up or down yet. The market hadn't shown you what it was going to do yet. You kind of saw that, and it happens before. And sometimes it's literally just 5-10 seconds. Sometimes it's 5-10 minutes. You'll start to see the change before this candle right here. So that tells you kind of what to look for, but you have to be ready to look for it. You have to know, okay, this is what I'm thinking. This is what I'm thinking as the setup, because we're going into support. Let me look at see what the premiums are doing on support, on the put side and the call side, and the same thing with my Sava. Or even if I have my SPX today and I was looking to sell, a lot of times, like as an example, it was going up, nice trend here, at some point when you get over here, the premiums on the call will start dropping a little bit. I think it dropped like a point or two. And basically, whenever the stock or whatever you're buying is moving in one direction, the premium's going to go with it. but then you'll start to see it slow down, the moves slow down, they'll kind of hold, and then they'll start dropping. You know, you'll see this, especially it's really awesome when I'm looking to sell a position and I see it going up. I'm like, oh, it's going up. Oh, the premium's going up. It's going up. Okay, it's holding. It's holding. It's holding. Uh-oh, it's dropping. All right, I'm out. You know, right there. I'm ready. I have it ready again. Like with the Sava example, if it was 10 bid of 12 ask and you're looking to get out, you better have your bid in like, sorry, your sell in at 9 or so, because you can't have it at 11, because if it drops to 9 to 10, your 11 is too high. You have to have it ready, because if you're trading like me and you're looking to sell, once it starts moving lower, it's going to be lower than what it's currently at, but still much higher than I paid for. Hope that answers your question in terms of that. Great. Any other questions? Any other hand raising, or please type in a message. Happy to stay on a little bit longer, but if that's it, we had a lot of great questions today, and I hope we went through a lot. And please, if you came in late or you didn't listen to my past recordings yet, please go back to either one, because I didn't necessarily, I have no problem repeating myself or reinforcing things, but some things I might have gone into more detail, 30 minutes ago or a week ago. So please look for that. And on my YouTube, I do kind of break down the big, the parts in the video where the big topics are. So you don't have to always, I still recommend you listen to all of it, but if you're looking for an exact topic, it's there for you to find. All right, last chance, no hand raising. Okay, great. Well, that wraps up today. Thank you for your questions. I love the questions. Hope it's all helpful. And good luck the rest of the week. It's going to be an interesting week with options expiration, but hope you all did well today. So that sets you up for the rest of the week. If you didn't do that well, don't panic, don't overtrade, take it one step at a time, find the right opportunity. Thanks everyone. Have a good night.